What's going on, family? It's Curtis Spring Eatmon here. We're having a conversation about what?
About how all cash value life insurance is not created equal. And it's so funny because a lot of people think that cash value is all the same thing, that it's like, oh, there's a whole life and I already know how that works. Permanent policies are all the same, but they're not all.
So there's many different types of cash value policies.
Exactly. So
you want to talk about it?
Yeah, let's get into it.
So if I'm not mistaken, there's 4 different types of life insurance policies when it comes to cash value. And then there's 6 different types of benefits that we're going to actually go together right now. So the first one that most people are probably familiar with is called what?
Whole life.
It's got
the grandfather of permanent policies.
Because it's supposed to take care of your what? Whole life, right? So when you start breaking that down, so why do people even decide? Why would they want to get a whole life policy?
Because it's permanent, right? So that is a really important thing, that you have a permanent policy that's going to cover you for your whole life. Like I always say that the most important policy to have is the one that's enforced the day that you pass away. So having a whole life, a policy for your whole life, is a good thing. But there are some things that have evolved in the industry that unfortunately whole life has not always kept up with. Doesn't mean it's a bad policy. It just depends on what you're looking for it to do.
Okay. All right. Perfect. So when I started thinking about whole life, there's a lot of different companies that offer it as well.
Mm-hmm.
And, there's been this whole concept of, all cash value is trash value.
Mm-hmm.
Have you ever heard that concept before?
Definitely heard it.
Okay. Well, so what do you think about that when you hear about whole life and you think about cash value? What do you think about that whole statement?
I think it's important to understand that you have the right agent who knows how to structure and properly structure a policy for whatever your needs are. Because the thing that people have a misconception of is that all insurance is like, oh, this is how much it costs. This is how, give me your age, your height, and your weight. Now, this is how much it costs, right? And no, it's like there's a lot more that goes into how you structure a policy and how you want it to perform. And so if you're looking for it to perform certain ways, then you might benefit from different types of policies. So the most important thing is having the right agent that knows how to properly structure these policies for whatever your needs are, and as well as that, the right companies. So I think that's the most important piece.
So basically what you're telling me is that not all cash value life insurance is created equal, but also not all life insurance agents and brokers are created equal as well. So you need someone to strategically structure that policy for whatever that need may be. So when you start breaking down whole life, I'm thinking about 6 different benefits. Number 1, does it even have a death benefit attached to it?
Right, yes.
Okay,
Mm-hmm.
And it does, right? And now a lot of people will say, well, is that really going to be guaranteed to outlive me?
Mm-hmm.
It can be if it's structured properly, right? Another benefit I would look at is, does it offer living benefits, right? And what is living benefits? That means if I ever get sick, injured, terminal ill, ever have heart disease, stroke, cancer, do I have those different things attached to my policy where I can still access that death benefit to take care of my income because I'm no longer able to be productive and go create income for my family if I have a health issue, right?
Right.
And really, honestly, that's the bigger threat to all our incomes more than even death, is having health issues, especially with all the foods that we're eating today.
Mm-hmm.
A lot of people not working out as much as they need to.
Yeah.
And a whole other conversation as well with that. So that's the big problem. Another one I see on, whole life, I guess you would say, is, does it have cash value, right? And then the real question with whole life, is there a component of cash value? How do I know how much cash value I'm actually going to get? Is there an interest rate? Do you know how that kind of works? So you kind of explain to me how that works?
Yeah. So first of all, explaining cash value to those people that this may be new to. So cash value is kind of like a savings account on steroids that can be attached to your insurance policy. And so some people utilize that to add to their death benefit. Some people might utilize that to be able to take out loans from themselves, to be able to, do whatever it is that they're looking to do. They want to grow money there and have some tax shelters and all these different things. And that's really great. But the benefit of life insurance is life insurance. That's number 1. That's the first thing to think about, is knowing that your biggest thing is having life insurance. But the thing about whole life, with whole life, is you have that fixed return.
So then therefore, whatever the company offers in that whole life policy, maybe it's 3%, 4%, whatever that fixed interest is, it doesn't mean if the market goes up, you get more interest.
No.
But can I lose money in it?
No.
Okay. All right. So the real question is, we found out a couple of different things we like as benefits with whole life, right? Which number one is, do I get a death benefit? Yes. If that's important to you, whole life will make sense. Living benefits, right? Because that's the biggest threat to your income, right? It's health issues. So I can be able to leverage that as well, depending on what type of whole life that is. Another big problem, or not a problem, but I guess you would say a benefit would be cash value. We just mentioned is that, well, how is your cash value going to be structured? What type of interest going to be attached to that? And is that already up in front, already defined for you? So you're very clear on what your return is going to be,
right?
When you're putting your money into that type of policy. Another one that whole life does not have, which I believe is a big benefit, is market participation.
Right. Yes.
Okay. Because what if the market, most of the time it's a bull market, right? So most of the time it's up. But what if it crashes and the whole life policy, can I lose money? No. But what if I'm guaranteed this 3% interest rate, this 4% interest rate, but the market goes and does 20%, but I get none of that upside, right? So the market participation, you could be losing a lot of interest, a lot of opportunities for cash value attached to your policy to help you get to where you want to go, cash accumulation, because you don't have that market participation. Another benefit is tax advantages, though.
Right.
Right? So to me, there's only 3 ways to be taxed, right? You could be taxed now,
taxed later,
or taxed never. And it's never talked to us about it, right? That's been an issue for a very long time, right? It's kind of interesting. We were in school for over 18 years, but they just don't talk to us about how taxes work. Kind of interesting how that concept. That's another conversation for another time.
Yes, absolutely.
But what I also want to look at as a benefit to these permanent policies is called flexible premiums. And in whole life, I'm not able to have flexible premiums, right? Once it's a fixed cost.
Exactly.
And if I don't keep paying that, what happens? My policy can lapse, which means it can cancel. So whole life, again, you got these different opportunities where you got death benefit, living benefits, cash value, and then you also have tax advantages. Which only gives me 4 out of the 6 of the benefits that are offered in a permanent cash value life insurance policy. Another opportunity you can look at is what? Universal life.
Yes.
Which was an upgrade from whole life, right? So what's your thoughts on universal life policies?
So universal life policies are really great as well, because also it's the insurance, first of all, that you have that death benefit. That's very important. It also has opportunity for living benefits, which is also important, that we just discussed. Like you said, it's very interesting because most of the time people think that death is going to be their problem, but it's actually outliving your money that is going to be a lot of the problem. And some people are going to be sick or injured or things like that. Those are the issues. And so these policies are able to protect from those types of things. If you get sick or injured, or you need to pull out a policy, I don't know, something like crazy that could probably never happen, but I don't know, let's say you have like a pandemic, right? And you're not able to work for months and months and months. That would never happen. Never. Let's say you had a policy like this, right? So maybe you have the opportunity to cash in on this. If you had COVID during the pandemic, in the early times during that time. But there's a lot of different reasons that you're able to get these types of policies. But it has those living benefits. It also has cash value, which is very big deal. It doesn't have that market participation, right?
So there's another fixed interest component to
exactly,
it as well.
Another fixed interest component. And universal life, it does have the tax advantages, which is great. Pretty much all these policies have that tax advantage. And then also the flexible premiums is something that comes into play here. So what that means is, let's say that there's like a cost of insurance, and then there's a maximum, there's a minimum, right? And so then let's say, for example, that I need to pay a little bit less that month, but my insurance is, let's say my cost of insurance is $20, right? But my policy is calling for me to pay $50. Let's say then I have a little wiggle room between there of flexibility that I'm able to pay, down to the $20 for that month. And then I could go back to paying $50 next month if I was able to do that, if something just occurred that month that I wasn't able to pay.
So it's not a fixed cost in that sense. So I'm able to put more into it or less depending on my situation.
Exactly.
Okay. That's good, especially on certain times like this. We don't know what's going to happen with our incomes.
Exactly.
Unless you're a business owner, you can control that. But even with that, you can still scale unless you have some guaranteed passive income coming in.
Exactly.
Right. Okay. So that's universal life. Another policy would be what? A VUL, right? So they upgraded, which is called a variable universal life policy. And what that, what's your thoughts on a VUL?
So a VUL, it's like I mean, it has a death benefit, which is great, but it's basically like a stock market vehicle with a death benefit.
Okay.
So your money is literally exposed in the market still. So let me ask you a question about this. So as far as the benefits go to the VUL, what would you say are the strengths and the weaknesses of it?
Easy. So when you start breaking down the benefits, remember there's 6 that you need to look at when you're deciding what permanent life insurance policy, cash value life insurance policy you should get for yourself. That's a mouthful, right? So again, when you're looking at a death benefit, does it give me a death benefit? Yes, it does. All right. So I do have that with the VUL. Does it give me living benefits if I ever had a threat to my income based on health issues? Mm-hmm. Yes, it does offer that. Does it give me cash value? Yes, but I'm going to go up or down based on what the market. So that interest rate is going to go up or down based on what's happening with the stock market. It could be the Dow Jones I'm using, it could be the S&P 500, it could be Barclays, it could be a lot of different indices, and that's going to be another conversation for another time, how indices work in these policies. And then you also have market participation, which that simply means is that I get to take the ride with the market up and down. That will be a benefit. But one of the issues that I see here is that your cash value is not protected. Okay, so what does that mean? So I have no protection of principal.
Right.
All right. So if I put $1,000 into that and the market drops, that means I can lose that $1,000. But I worked so hard for that money that I would never want to see it just dwindle off for something that I did not do.
Right.
So if I can't control that, that's an issue for me, because I work hard for my money, right? Maybe you do too.
Don't we all, right?
And so a VUL could actually contradict that because in essence, you have someone else controlling the ups and downs of how your income can really work in that type of policy. Next up, what you do have though is the benefit is tax advantages, and you also have flexible premiums as well.
Yes. All
right. So the biggest disadvantage is that you have no protection of the cash value that you have in the account. So you can build it up, but it can also be gone tomorrow, unfortunately, based on what happens in the market. So
exactly.
The last one's called an IUL, which is an index universal life, and for us this is a financial game changer.
Yes.
This is almost like your great grandchild that's able to see everybody do everything wrong.
Yeah. And learn from it.
And learn from it and say, you know what, let's upgrade and do better, because that's the whole purpose, right? Is you want your next generations to do better than what you did, right? So an IUL is created to be stronger than all the other ones. And why we believe that? Because it does give you a guaranteed death benefit, okay, if it's properly structured. Again, it gives you living benefits, right? It gives you cash value. It gives you market participation. It also gives you tax advantages. And then also, lastly, it allows you to do what? Flexible premiums. All right? And so you take all the worlds and you be able to combine it into one. It's the best mixed baby there can possibly be when it comes to a policy. So,
and it's interesting because we talk about the flexible premiums and we talked about, when you're having a down month.
Yeah.
But in this is a great opportunity. Also, let's say that you get a bonus at work or something and you want to take advantage of being able to have that market participation, right? So you want to put more money in there and have your money working for you. This index universal life policy is one of the fastest ways to create compounding interest. And so a lot of people don't realize that when you're looking for a place to be able to grow your money and have that compound for you, and you're able to put more money into it, then that's a very big deal, right? Especially when it's a tax-free growth. So that's a very big deal. What's your favorite part about the IUL?
Well, I love the fact that, again, the IRS has no visibility of what the account can do. And because of tax code 7702, it allows you to take that money out tax-free. And then there's a lot of different components in regards to taking loans and be able to become your own bank, or we call it arbitrage strategy. Maybe we should talk about arbitrage on another one.
Yeah, that's a good one.
Where I can actually put my money in one place and use it somewhere else, collect higher interest, and then still be able to have that money in that same account collecting interest as if I never took it out in the first place. That's a whole nother strategy that we're going to talk about. But there's so many different things you can do if you meet with the right life insurance agent, life insurance broker, because not all of them are created equal. They got to be able to properly structure this, all right, and strategically put it into what your financial game plan is too.
Okay, yeah. So at the end of the day, we know that we have the whole life policy, right? We've got the universal life policy, we've got the variable universal life policy, and we have the index universal life policy. So I don't know which one is your favorite. Yours might be different than ours. There is a place in the industry for every single one of these. They're all cash value accounts, but we'll see whatever your favorite one is. But again, the most important thing, making sure that you have the right agent that's helping you to structure these things properly. So we tell you, come hang with the Eatmons, because we are licensed professionals and we know how to help people with this. So at the end of the day, we're your trusted wealth coach and we'd love to help you out.